So in this video, I'm going to share with you exactly why 99% of life insurance agents are poor, that don't make money, and this is why the fail out rate is so high. The reason I make this video, I had a guy reach out. He said, I sold $120,000 worth of life insurance, but I only made like $20,000. I feel poor. Now on paper, you'd think he'd make a lot of money, but actually his bank account didn't grow. And in this video, I'm going to share with you why most life insurance agents don't know basic math, which prevents them from actually knowing how to make money. And if you can solve this problem and learn how to do math in your business, I promise you're going to make more money. Now, before we get started, I sold over $500,000 worth of final expense on my own pen. I made over $176,000 take home my first year as a life insurance agent. In the last 24 months, I've built with my business partner at Legacy Family Life almost a $6 million final expense life insurance company. And we pay for all of our leads. We pay for all of our agents' chargebacks. So we have to know this math, the basic math that allows us to pay salaries. And ultimately, this is why I'm fired up, because if you learn this, you're going to make a lot more money. And I guarantee it, you can put more money in your bank account if you learn this. So let's jump directly into the meat, into the numbers. I'm going to give you guys 3 situations that you can understand. And this is why people don't make money. They don't know the math. So as you can see here on my screen, I'm going to give you a situation. Okay, number 1. Okay, this is a $90 transfer. Okay, so if you're selling final expense, life insurance, there's these opportunities where, hey, you can just, pay, live transfers are $90, $100, but you don't have to worry about calling people and you're going to make all this money. So let me give you guys this situation here. So situation number 1 is a $90 transfer. So let's say we pay $90 and it takes us 7 leads to equal 1 sale. Okay. So what I want you to understand is that if I took 1 sale out of 7, that means that I had a 14.2% close rate. Okay, that means my close rate on my leads. So I generate 7, I sell 1, I get a 14.2% close rate. Okay, now on that 1 sale, we're really excited because that sale, that cost was $50 per month premium. Okay, let's say the client is paying $50. Okay, now here's where the math gets mathing and understanding how you make your money. Okay, so you take the $50 sale that you just did, you multiply that by 12, because that's going to equal your $600 annual premium. This is where everyone posts on their leaderboards. This is where everyone's talking about, like, here is my AP. That means annualized premium. So you take your premium, multiply that by 12 months, and you get $600 of premium. Now, on average, I want to be a little generous here. Let's say your contract rate is 110%. Okay. So you take your 110% contract rate and you multiply that by your $600 premium, which is what you got here, your $600 premium. Okay, that is going to equal, here's the money here. We got the $660. Okay, $660 is my, contract rate times my annual premium. Everyone got me there? Now you're going to take that $666 and you're going to multiply that by what's called the advance, the 75% advance. That number there in the middle of 0.75 is if it's simplified issue, meaning that you only get, 9 months of your 12-month advance. Instead of it being like 100%, you only get 9 months of the 12. That's why you give it 75%. Now you take that 75% advance, you take the 660 times that by 0.75, and then you're going to go ahead and get your front end cash collected at $495. Let's change that to green. Okay, $495. Okay, so on that policy, what's going to actually hit my bank account is $495. Okay, now let's go back and let's see how much it costs. So the $90 that we took, you times that by 7, you get a lead cost of $630. Okay, so I paid $630 to get a cost. Let me just. Screen's not working. Okay. To make $495. Okay. So if you're tracking with me here, you can see that at the end of that, I'm going to lose, you can see that $135. So I've made a sale. I posted it on the leaderboard. I'm really proud of myself. But after acquisition and upfront cash collected from that business, I've lost $135. Yet your upline will be like, great job. I'm so proud of you. Keep doing what you're doing. Buy more leads. But the strategy that I'm working with right now is not making me money. So I've done all that work to lose $135. Okay. That is situation number one. Okay. I want you guys to learn this math. This is the math that's going to make you money in this business. So we're going to go back to another situation. Situation number two. This is a common situation that I see in the industry. Okay. $15 Facebook lead. Okay. All these platforms out there typically sell their Facebook leads for $15. Okay. So let's say situation here is that we have 20 leads. Okay. We take 20 leads. We multiply that by $15. This is our cost. Okay. We take our $15 lead here. So we get $20. We spend $300. Okay. So that's our cost of business. $300 is what we spend. Okay. Then we make one sale out of those 15 leads, which equal a close rate of 6.66 close. Okay. Which on Facebook leads, not bad. Okay. 6.6% close rate. Okay. Now let's say the business that you sold, now we're going into the math to do the business on the money side of things. Let's say you sell a $60 per month premium. Okay. So Miss Betty, her policy is $60 per month. You take that, again, we're going to times it by 12. We're going to calculate our annual premium just like we did earlier. And we get an annual premium of $720 AP. Boom. You post the $720 on the leaderboards. You're telling everyone, hey, I'm making all this money. But let's actually get into the nitty gritty. Now, here's the situation. You take the $720, your premium, and you multiply that by your contract rate. But in this situation, the contract rate, which I'm going to change here, is actually 0.80 because we sold a guaranteed issue product. Guaranteed issue contract rates are lower than simplified issue. Let's say this lady had diabetes and COPD. She was really unhealthy. So you had to sell her a graded or guaranteed issue rate. So then you have to take less comp up front and you're going to take a hit here. So let's see it. So you take your 720 multiplied by that by 0.80 and you're going to receive $576. Okay. And that's your, LTV or your long-term value. But the thing is, you're not going to make $576. You still have to get advanced the money because the insurance company has to pay you. Now, when you're selling what's called guaranteed issue, you're only going to get 0.50. You're only going to get half of it. In the last example, we scroll up, we got 75. But on this example, we only get 0.50 because it's guaranteed issue. So you basically take this 576, divide that by 2, and you're going to make $280 in cash. Upfront cash collected. Okay. So just to be mindful of this situation, okay, what happened here is that you received $288, okay, minus your overall lead cost, which you spent $300 to acquire that client. And guess what? Good news is that you lost $12. Okay. But you get to post your sale on the leaderboards. You get to tell your friends that you're making all this much money. So on life insurance. And the thing is, you're going to continue to acquire clients at this rate and you're going to lose money. So that's situation number 3. The last situation, number 3, that was number 2, but number 3, I'm going to get into it. And then I'm going to give you guys a solution. So keep following me, keep learning this stuff. I can't preach how important this is. I'm going to give you guys a solution here in the end. Okay. Situation number 3. This is why people lose money. Situation number 3. And yes, I use the money side for the S. Okay. So situation number 3. Let's say we have a $7 lead. Okay. Boom. And we have 40 leads. Okay. So this is like, hey, we're going to go like the old lead route. We're going to go to like 30-day, 60 leads. We're only going to spend $7 or so on some leads. But the situation here is going to change because we sell a direct express business. Okay. Okay. So a credit card or direct express business. No bueno, but I'm going to share with you why people do this and how they lose money. Okay. So let's do the math on this guy here. So we take the $7 lead, times that by 40, which means our cost is $280. Okay. Then we only close 1 out of 40 because these are terrible old leads and I don't have a skill set yet. So let's say you have a close rate here of 2.5%. Okay. 2.5%. And you make a sale of a boom $100 premium. Okay. So boom, you're balling $100 premium. Okay. So you take $100 times that by 12 and you tell your team that you made $1,200 AP direct express business. Okay, direct. Okay. Now here's the kicker, and here's what we need to know, and here's why I make this video. You did not make $1,200. When it comes to direct card business and any type of policy, the companies aren't going to do the advance. They're only going to pay you the monthly premium every single month. So Miss Betty pays today, you're going to receive $100. If she pays next month, then you'll get the other $100. Okay? But what you have in your bank account is the upfront cash collected from your investment of the $280. So you are not making $1,200 today. You are making $100 because you only get paid off the advance. You only get paid off of what the premium is, and it's not an advance payment, it's an as earned payment. As earned means they get the policy based off them paying every single month. So, for example, let me just give you the math here. Let me just give it in green here. I made $100 on this sale. That's what's going to hit my bank account. Okay. But I have to subtract my acquisition cost of $280. At the end of the day, boom, I just made negative $180. So yet I can post and tell my friends, hey guys, I made 1,200 AP. I had a great week. But at the end of the day, you can see in all these three situations, you didn't make any money. So I want to give you guys the solution that you can learn, that you can implement into your business to help you make more money. Okay. Before I give you the solution, I want you to know that this is not accounting for, number one, placement rate. Okay. This is why people lose money, because they don't know what these terms mean. Okay. So if you learn these, I promise you, you are going to make more money than your friends. Placement rate. Okay. What is placement rate? So if I sell 3 policies and all 3 of them don't go into business, like let's say Miss Betty never makes her payment, well, now I actually lost more money. I've lost all the acquisition cost. I didn't even acquire a client, so I spent money on leads. I didn't even actually acquire a client. So if the placement rate is 0%, that means every person that you sell doesn't make their first payment. But the average in the industry is around 60%, meaning that 60% of your business will make their first payment and 40% will fall off. So according to this is that if I sell 3 policies, one of those 3 are most likely not going to be here next month, meaning that I actually didn't make the sale. Okay, so placement rate, you need to understand that all your business typically does not go into force, so you can't count it as upfront cash that you're going to collect because you are going to lose money. Okay, second thing that you need to understand is that placement rate. But I want to share with you guys 4 solutions for you. Let's go into the solution stuff here that you can use to implement yourself and actually make money in 2025 as you progress as a life insurance agent. Okay, first solution, number 1, let's scratch this one out here. Number 1 is going to be increase premiums. Okay. To make your clients worth more is one of the best things that you can do as a life insurance agent. The reason that you lose money on all 3 of these situations is because you're not acquiring them at a cost. What you're spending to acquire them is that you're not getting an upfront cash collected, meaning that you're not charging enough for your work. And the way that you can do that is to set a floor of $80 is the floor. I don't sell anyone under $80. When I present my numbers, I'm going on 80, 100, and a max option of $200. And if you understand that these ceilings are in place, when someone tries to buy a policy for $30, $40, $50, you can't do it, okay? Because ultimately, our goal here is not to run a business that's not making us money. Our goal is to make a business that's going to make us a ton of money, okay? So make sure that you set that floor on your pricing, because no other company, if you're selling lawn care or someone's coming to fix your windows, they're not going to come do your business and say, hey, yeah, I'll come over and actually I'm going to fix your windows and it's okay if I lose $300 today. It's okay. I'll still do it cheap. That would be a dumb business move and you won't stay in business. So make sure that you increase your premiums at a place that you are going to allow yourself to make more money. Second solution, number 2 is contract rate. One thing that you can control if you're an independent agent or you work for someone is try to increase your contract rate. So let's say your contract rate is a 90%. Okay. How can you get that 90% to 100% rate? And that's going to allow a 10% lift, which is incredible in your upfront cash collected. So simply just going to your carriers, doing enough production, you can say, hey, I'm selling $30,000 a month. What can I do to increase my compensation? And it's your negotiating power that will allow you to get the increased contract rate. But if you don't ask, you'll never get it. And this is where people make their margin. For example, you get a contract rate through an IMO at 90%. Okay, 90% rate. They are getting a contract rate for that same company at, let's say, 130%. So they are making 40% margin in between off of all your production. Okay. And I want you to know that. So you need to go to them and say, hey, what's your top level contract rate? Are you at 130, 140? And that allows you to negotiate in between there what the margin is. So if they're at a 90%, if you're at a 90% and they're at 100%, okay, 100%, there's really only 10% room of negotiation, which means they only give up 5%. So you have to ask them, where are you at, so that I can understand how I can fit in between to increase my contract rate. Contract rate is the fastest way to get higher upfront cash. And number two is the increased premium. Increase your premiums, you get a higher contract rate, you are guaranteed to make more money. Third and easiest way that we implemented this is just remove card business. No card, okay? Remove the card business from you, because ultimately you don't get the advance, you don't get the, the 30-day cash like you want, you don't get the 9-month advance or the the 50, I guess the 6-month advance, whether it's simplified issue or guaranteed issue. So remove card business. You don't want to as earn business in a final expense business, because you need the money to reinvest in marketing, resources, and you have a lot of costs, and ultimately you need the money up front. So just remove card business from your business. And then the last thing that you need to do is that you need to decrease acquisition costs, okay? But how do you decrease acquisition costs? Because this is really important. If your cost to acquire a client is $500 and you only make $400 per client, you are losing $100 every single time you acquire a client. And if you do that long enough, you'll go out of business. So how do you decrease your acquisition costs? Number one, put this in green here for us, is number one, you need to increase your close rate. Okay. So if I can go from a 5% close rate on my leads to a 10% close rate on my leads, I will decrease my acquisition costs. And I want to share with you guys the example that I gave you earlier. So let's say I have the $90 transfer, okay? And I take 7 of those. So I take $90 times that by 7, okay? That means I have a cost still of business, okay, there. So the 90 times 7 is that I'm back to the $630 in total costs, okay? Now, let's say I make 2 sales at a $50 premium each, okay? So that means 2 sales times 50, okay? So that means I have 2 out of 7, which my close rate has gone up to 28%, which is a close rate, okay? Which is incredible, okay? Now I take the 2 sales at 50, so 2 times 50, I have a $100 monthly payment, okay? I take the $100 monthly payment, times that by 12, and I get $1,200 AP. And then I go back to my contract rate. I take the $1,200 AP. I multiply that by my 110% contract times 12, times that by 0.11. Okay, here equals $132. Okay, that's my contract commission there, LTV. And then I multiply that 135 times that 0.75 times 0.75, I equal $990 in upfront cash. Okay, just so I'm making one extra sale. Okay, if you're following me here, I've now collected $990 in cash, and I've spent my $630. Okay, and I've made $360 in upfront cash. I've actually made money by just increasing my close rate. So hope you followed along with me there, but increasing your close rate, you'll see there, will help you make more money. Sell more people, you'll make more money. And the second way and the final way is just to improve your marketing. If you can get better at acquiring clients at a lower cost, if it takes you less leads, if you can get your lead costs down, you will lower your acquisition costs and ultimately allow you to make more money as a life insurance agent. So here is the exact reason why people struggle to make money as a life insurance agent. I hope you guys loved this video. If you want more like this, let me know, and I'll see you in the next one. Take care. Cheers.